Hey traders, welcome back to the weekly Forex Forecast. US credit rating outlook changed to negative by Moody's. This was the news that hit after the markets closed on Friday, and it hit just as we traded into the bull trap area I highlighted in last week's video, which mirrors the start of the 2022 bear market. This is significant though, because on August the 1st, when we had Fitch downgrading the US credit rating itself, so this is a downgrade of the outlook, Fitch downgraded the rating itself, and that marked the top of the stock market for the year. So going into this week, I only want to be focused on risk-off setups once again. Okay, so if we look at the scores for the coming week, you can see there's only one currency giving us significant edge, and that is the Japanese yen to the short side. The problem is the Japanese yen, although it's been a very good short recently, those of you who have been following the weekly Forex Forecast videos will know I've been filtering out yen shorts. Why? Because I'm concerned we're close to risk off coming into stock markets, and this is likely to spur safe haven assets and currencies like the dollar higher, like the Swiss franc higher, like the Japanese yen even higher. And so once again, I mean, had you have shorted the yen over the last 4, 5, 6 weeks when the system was telling you that this is a really good short, you would have done very well. I chose to filter them out, and I'm still doing that again. And my warning would be this: if you have been shorting the yen in line with the scorecards over the last few weeks, take the win, take the W, and walk away from the table this week, because the yen itself is now trading into the prior major bottom. And this is happening right as we've traded into the bull trap area, where we could see bulls start to lose confidence and reverse their trades. And at the same time, we have a bearish catalyst now in the Moody's outlook downgrade on Friday. So because of all these things, I'm definitely still focused only on risk off setups. That means trading Forex pairs, which if we get a sell-off in stocks, will benefit as opposed to being on the wrong side of that. So what I'm going to be looking at this week, I'm filtering the yen shorts, and everything else in the scorecard system is kind of neutral. There's no real outstanding long or shorts. So I'm looking at risk off trades, and I'm primarily going to be looking at trading these from their upper and lower bounds, because if you get involved in these markets midweek, I mean, usually we look for breakouts midweek, but the problem is when you have choppy markets, when you have none of the markets really scoring with significant edge like we're seeing, in other words, none of the markets are really above 50 or below 50, like the Japanese yen is, but of course, as I just said, I'm filtering those shorts. You can see these markets kind of chop around. And especially next week, we have US CPI coming out on Wednesday. So I think between now and Wednesday, we're very, very likely to see the markets in Forex not doing too much. And we're probably going to start to move from Wednesday onwards after CPI comes out. So going into next week, based on everything we've just discussed, I do favor US dollar longs once again, and also euro longs. I'm going to be filtering yen shorts, but I'm not going to be buying the yen at these levels either. And I want to pair the US dollar and the euro to the long side versus those currencies which, if we get risk off in the stock markets, they will naturally sell off against the euro and the dollar as risk off comes into the stock market. So I'm going to be looking at US dollar and euro longs versus the Canadian dollar primarily, but also the pound and the Australian dollar to the downside. And we're also going to look at New Zealand shorts as well, but I prefer CAD, pound, Aussie primarily to the short side versus the euro and the US dollar next week. So looking at the markets for the coming week, crude oil to the downside was a market highlight in last week's video, and we traded right into the lower bound. But the risk is with crude oil shorts, just bear in mind, there is a conflict in the Middle East, and any escalation of that could see a price spike. So they are a little bit risky, but any continued pullback in this market next week is viewed as an opportunity to look for bearish reversals intra-week. And you can see this nice kind of bear flag setting up. We have this consolidation. Then we have the breakout with momentum, and momentum precedes price. So it's telling us there's a high chance, just based on these technicals here, that we're going to follow this through. And of course, you put that to the macro backdrop, which is actually negative as well. This all increases the odds of further downside in crude oil. So any pullback is viewed as the opportunity to look for an intra-week breakout into the 74 area. And if we pull all the way back and we retest the low of this kind of consolidation at the 81.50, this is the second place next week I'd be looking for a near-term short opportunity in crude oil. Next is US dollar CAD. Now US dollar CAD, pound dollar, Aussie dollar, as well as EurOCad, Euro pound, Euro Aussie. These are my 6 favorite markets heading into next week. You can see this just kind of down and up kind of technical pattern in the US dollar CAD. This is indicative of a market that is very, very choppy. And in fact, Forex has been very difficult to trade, at least relative to the rest of the year over the last 2 weeks. And going into this week, you know, again, it may be difficult because we might not get much volatility leading into Wednesday. But CPI on Wednesday is going to provide a catalyst in the dollar pairs. So just bear in mind all the dollar pairs have that. So what I'm going to be looking for is I'm going to be looking for a consolidation into CPI on Wednesday. Then if we break out on CPI, I'm going to be looking for a pullback and a follow through into the 1.3920 area. And if we consolidate and simply sell off into the 1.370, this is the second place next week I'd consider looking for a near-term buy opportunity in US dollar CAD. So just bear in mind, regardless of what CPI is, I can either buy US dollar CAD or do nothing next week. Selling this market is not an option. And if we get a very, very cold, in other words, we miss CPI to the downside and inflation is coming down much faster than expected, if we get that and we blast through the lower bound, then I won't be buying any of the dollar pairs at all. I won't be trading dollar longs to the upside because that's going to be a very negative catalyst for the dollar. What I suspect, especially when we look at inflation expectations and everything else, I suspect actually we're going to see the opposite. We're probably going to see at least, you know, as expected or potentially a slightly hotter than expected CPI. But it remains to be seen. Very, very hard to predict these kind of outcomes. I am going to be primarily reactive as opposed to predictive based on CPI next week. Next is pound dollar. And again, you can see this kind of up and down kind of whipsaw, indicative of a market which is lacking direction. And just kind of like what I was saying previously with US dollar CAD, this kind of up and down move shows a real lack of direction. And we're really seeing this in the scorecards. The scorecards are telling us markets are likely to be choppy, to lack direction, and actually we're not seeing really any markets with significant edge to the upside or the downside. So very choppy markets. Any pullback next week, I'm going to be looking for a breakout to the downside. I can either short pound dollar or do nothing next week. Buying this is not an option. So on CPI, if we get the breakdown on Wednesday, I'm going to be looking for a pullback and a follow through trade into the prior lows down here at the 1.2080. And again, if we get CPI coming out slightly cooler than expected or as expected and we see the market pull back, I'm going to be looking, and I'm not going to sell it straight away. If this pulls back into this market after CPI, I would rather wait, you know, give it a few hours, maybe even come in on Thursday morning and see if this kind of stalls out in this area first. And then I would consider shorting it, because if you go short straight away and it blasts through, you know, you're on the wrong side of a CPI report. So that's what I'm going to be looking for. These are the two places and the two setups I'm looking to short pound dollar next week. Next is Aussie dollar. Also this kind of up and down scenario. So any pullback into CPI is viewed as an opportunity to look for a bearish breakout on CPI. And then any pullback, that's the opportunity I'm going to be looking at shorting this market into the prior low over here, the 0.6270. And again, if we get CPI coming out sort of as expected, maybe slightly cooler, you know, to the downside. If it's significantly cooler, then that's when you could see price blast above the upper bound. But if it's just as expected or slightly cooler and we kind of pull back and we test this off the report, then I would be looking at fading that move next week in Aussie dollar to the downside. Next is New Zealand dollar. It's the same setup, but I prefer these markets over here, especially US dollar CAD. I do think we could see a decent move up in US dollar CAD next week, especially, but all of these markets, I am focused on pretty much the same move, so short versus the dollar. Any kind of consolidation into CPI, I'm going to be looking for a breakout on CPI like this. Then I'm going to be looking for the pullback after the CPI report. I'm going to be looking to short down into this area at the prior low, or the 0.58 kind of area in general. But I do like both of these lows sitting in this area. If we just consolidate, and again, we get the opposite happen after CPI, I cannot buy this market, so I can either be short or do nothing. And if we pull back and we test this area, maybe even we pop through, you know, definitely we could even pop through on a CPI report and test the high. That would be great. If we actually push through this area, even better. And then, because the further we push through this, really, the more chance you have of stalling or reversing. So if we push into this, especially we test the resistance area as well, that's the second place post CPI, I'd be interested in looking for a short in this market. And last but not least, we have euro dollar. This is not a fantastic market, in my opinion, next week. Why? Because both the euro and the US dollar are highlighted in the scorecards as the best long ideas. So you're now in this scenario where you're kind of trading two strong currencies against each other. If you're going to do that, I would not trade that intra-week, because if the market's choppy and you trade intra-week on the breakout, you can basically get chopped to pieces. So when you've got two kind of evenly matched currencies in the scorecards, what you really want to do is look to fade any kind of move, because they should kind of continue to consolidate. We do have CPI, and that could break the consolidation, but I'm only looking overall at risk-off trades. Risk-off is euro-dollar to the downside. So any continued move into CPI, or if we just consolidate and then we break out to the upside on CPI, this would be the same setup as the others here, where I'd be looking to short above the previous high and in this area at the 1.0780. So I'd be looking to, again, CPI comes out, we test this area, we test this high, maybe we even break above it and we kind of stall out. I'd be looking to fade this post CPI. Or if we just kind of consolidate and we do the opposite, we break down on CPI like this, so we get the sell-off initially, and then usually you get the opportunity for it to pull back and then the follow through into the 1.0570 area roughly. So all of these pairs here, I can either be long the dollar versus them or do nothing, and that includes euro-dollar next week. Next to the euro pairs, now the euro is not actually a risk-off asset. It is highlighted in the scorecards as the second best long idea at the moment, although it's still bullish to neutral. It's not showing outright bullishness in the scorecard. So nothing is considered, as far as the scorecards are concerned, fantastic in terms of opportunity next week. These are basically the best, or rather, let's say the cleanest of all the dirty shirts. So euro longs is the second thing I'm looking at, and yes, it should decline and will decline against the US dollar if we get risk off in stocks. And I'm going to show you in gold and silver in a moment why I think they are confirming of potential risk off coming in stocks. But if we get risk off in stocks and we see that flow into the Forex market, as usually is the case, then the euro, whilst going down against the US dollar, probably against the Swiss franc, and maybe even the yen if the yen bounces off the low, it will appreciate against the commodity currencies in risk off. And in fact, it will also appreciate against the pound in risk off as well. So any pullback next week in EurCad is viewed as the opportunity to look for breakouts. And again, here's the thing. Bear in mind the euro itself is not especially strong. You might want to filter these intra-week breakout trades and instead just simply look for a test of the lower bound. And if we get a test of the lower bound, this would be the opportunity for long positions in EurCad. So again, yes, every week I do look for the intra-week breakouts, and I'm looking for a pullback and a rally into the upper bound in this case. But just bear in mind, and I'm not going to reiterate this point as we go through the rest of them, just bear in mind as we go through this, that because the markets are kind of neutral still, the fading of the upper and lower bounds is probably going to be the highest probability move next week, and a filtering out of the intra-week breakout stuff. Next is euro pound. So any pullback in this market would be viewed as an opportunity to look for a breakout intra-week into the upper bound at 0.8, you could say 7950. But again, a better opportunity that I'll be looking for next week in euro pound is if we come down and test this, and in fact we kind of have this support over here. It's a bit of a inverse head and shoulder setup almost. But if we come back and we test the 0.8680, and especially if we can test some of these lows over here, that's going to be a really good opportunity in my opinion. I'm going to start to look for long opportunities in euro pound to the upside. And again, if we get a bull trap in stocks working out and we get stocks selling off, then we should see euro pound perform to the upside. Next is euro Aussie, also a market that should perform well to the upside in risk off. Any pullback is viewed as an opportunity to look for a breakout and a rally into the 1.700. However, again, I will personally be most likely filtering out intra-week breakout trades myself and focusing on these upper and lower bounds. If we pull back into the lower bound of the 1.6625, this would be the area I'd be looking for a near-term rally in Euro Aussie next week. And the final pair is Euro New Zealand. Now, especially Euro New Zealand, because the New Zealand is actually stronger in the scorecards than all of these other currencies. This is definitely a market I'm almost certainly not going to trade intra-week. So you can trade the breakout intra-week if you so wish, but it's not a great idea when these markets are neutral or choppy, like I said. But if we pull back and we test the lower bound of the 1.7950, suddenly this becomes a very interesting setup, because naturally, if you've got two currencies which are closer in strength, and that's why this is not highlighted in gold, they tend to hold these ranges with a higher probability. So any test of the low, especially if we come through here, and we test this low and we hit support, this would be a great place to look for a near-term buy opportunity in Euro New Zealand. Okay, so wrapping up the video with gold and silver. Now, the reason I think that gold and silver are likely confirming risk off is because last week gold sold off around 3%. We finished the week down around 3%, and silver was down over 4%. Now, usually in risk on, you would expect to see not just the dollar selling off, but also gold and silver appreciating to the upside, especially with a weaker dollar, and especially silver. Silver more than gold, because you can make the case for gold as a safe haven asset, but silver more than gold should absolutely be outperforming in a real risk-on environment. And the fact silver was down 4% last week suggests, although we've had a rally in stocks, the overall environment is not conducive to serious or outright risk on. So I do favor shorts in these markets next week. I prefer silver shorts over gold shorts. Any pullback is viewed as an opportunity, and these markets should be slightly less affected by the CPI report. So these two may actually be very good markets to keep an eye on next week. But any pullback is viewed as the opportunity to look for shorts, breakouts to the downside in this case, into the 1900 area. Or if we pull all the way back and there's a nice high, this high and this low sits right in here. So there's a nice key area of broken support, turning resistance. If we pull back and test this in the upper bound over in this area, the 1975 roughly, this would be the second place I'd be looking for a near-term short opportunity in gold next week. Now, gold is kind of similar to oil, like I said before, in kind of between a rock and a hard place, because although it's a good short, if we get an escalation in the Middle East, we can see crude oil spike and we could see gold spike. So that's one of the reasons why I favor silver shorts next week over gold shorts. And finally, we have silver. It's already starting to break down. You can see it's quite choppy, and now it's starting to break down below the prior lows. So any continued sell-off and pullback next week is viewed as an opportunity to look for bearish breakouts in this asset down to the 2140 area. And if we just pull back and we fail to break out and we bounce and we bounce and we pull back and we retest the high, or even better, if we pop through here and we test this high, this would be the second place next week I'd be looking for a near-term short opportunity in silver. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, forex, and commodities.